Hello everyone, welcome to the Trendline Investor channel. So last week's video, we looked at two stocks. One was Monte Carlo and other one was Arman Financials from the financial space. Now both stocks have done really well in the last 1 week and they've given 10 to 15% returns in a very short span of time. The markets have been doing well. That's also one of the reasons why these stocks have done well. But if you want to really learn how I found these stocks, you might want to check the video because I did give my view on both technicals plus the fundamentals. And these two are really, really important to find the stocks which can really give you good returns in the short run and in the long run as well. If you think that you cannot find stocks using technical analysis for investments, that is a myth, and don't get stuck in the myth because I have a lot of videos which I have in my channel which can help you find these kind of stocks. So keeping that aside, in this week's video, we're going to look at two stocks, one from the auto ancillary space. Yes, this space has been doing really well. And the other is from the content solution space. Okay, but before that, first we're going to take a look at Nifty. And what is Nifty doing? Do we have still some potential to do well? I've been calling a bottom since the last couple of weeks, but I think the market still has some time to, head higher. It can still head higher towards levels of probably 16,500 levels in the probably next 1 month or so. And then after that, we're going to look at these two stock videos, both the technicals and fundamentals. So if you haven't subscribed to my channel yet, do subscribe. And let's take a look at what Nifty has been doing in the last 1 week and what it has to do in the future as well. So I have the Nifty chart in front of me, and as usual, I'm going to say, look at the monthly charts. The monthly charts is going to give you a very good perspective as to what the long-term structure is doing or what the stock has or the index has been doing in long term. So if you take a look at this Nifty chart, we've had, a strong, massive rally from the month of April till the month of October. And that was the first time we've had a strong wick on the top and then we had a red candle follow the next month. Now that probably is an indication in hindsight as to, we've probably formed a short-term top and we're probably not going to head higher as soon as possible, right? So that was one of the first signs, but then we had this low and, it's been almost more than a year, or at least more than 3 quarters, and we've still grinding, and this market has been really one of the toughest markets to trade. And I'm sure a lot of you opine with me, but what I want you to notice is those wicks which are forming at every move down, right? So we've gone from 18,600 levels to the lows of 15,180 levels, but we have been forming, wicks, which means there is demand every time. And now this month, we are finally, we still have 3 weeks left for this month to get over, but we're forming a very good green candle. And if you take a look at the weekly charts, we've had this strong lower high, lower lows formation, which in Dow theory terms is a downtrend, right? So we are in a strong downtrend on the weekly charts. Definitely we are in a downtrend also, in the monthly charts as well. But just switching to the daily charts, I'm just going to show you what I am looking at, from a short-term perspective. So from a short-term perspective, I do feel that we have, probably this move that we are having here. I'm just going to go to the hourly charts and just going to show you what I'm looking at. So I'm just going to connect this lower here. I'm going to drag that, and then I'm going to connect this stop here and there, right? So for me, and if you look at this channel is probably a good channel for me because we had a breakout here. We did retest the middle of the channel. Again, we retested the middle of the channel, went high, again retested, then we broke down, and now we headed higher, kind of took support around there, and we are now, towards the upper end of the channel. Now, some people might say, channels aren't really reliable, but for me, I kind of tend to rely on channels. But for me, the trend is still up. And on the early charts, at least, we are still in a short-term uptrend. And we need to take out this level of 16,270 levels and break out of the channels for us to, head higher going forward. Otherwise, we might face some resistance over here and we might, go sideways, or we might even come down back to the levels of 15,600. So these are multiple options. But for now, as of today, if we do not go below the lows of 16,150, then probably we might go sideways, and then head higher. Or if we go below the levels of 16,150, then we're going to go sideways or probably come down towards the middle of channel and, probably come down towards the levels of 15,800 levels as well. So these are the options that I think as of now that we were doing. But if you look at the daily charts, we have managed to, break out from a very strong resistance zone, which was that level of 15,850 levels, right? So let me delete this quickly just to show you a little closer perspective as to what we are doing on the hourly charts, right? So we did have a massive, you can say cup and handle or inverted head and shoulders, how you want to call it, but we did break out, did a retest of that level. It was a hard retest because we've come deep, pretty deep to fill that gap, and now we are heading higher. So trend is still up. So until the levels of 15,850, 900 is held, I still feel that this market has legs up, and I'm looking for targets towards at least of targets of 16,800 levels, which is this major swing high that we had recently. So this level of 16,800 is what I'm looking at, and if you manage to take out that, then probably we're going to look at targets of even 70,400. But for now, short term, we might go sideways probably for a few more days before we head higher, because remember we've had 3 days move up, continuous gap ups, and I think we might go sideways for some time or correct some time, and finally we might probably head towards levels of 16,760 levels or 16,800 levels. So that's my outlook on Nifty itself. And now let's take a look at the two stocks. Okay, now before I get into the stocks, I want to show you again this week. This is that one scanner I run every week. So if you really want to learn markets, you just need to run this one scanner every weekend and buy a stock the next week, Monday or Tuesday, or whenever you see the signs of buying. And that's more than enough for you to make money, especially if you have a full-time job, and if you can't find time, you can still tend to make decent returns, at least 20-30% every year. That's something that I at least aim for with my full-time job, and it's pretty much possible. I don't say it's not very difficult. If you are able to put at least a few hours every weekend, every Saturday, Sunday, then probably you can make money 20-30% and slightly above that mutual funds return that you want to make. So I want to show you that scanner before we start looking at the stocks, and then we look at the two individual stocks. Okay, so looking at the scanner, as I always say, this is the scanner that I run weekly, CCI crossing 100. Now this is the weekly time frame. So remember, we are looking at a large time frame, 52 weeks in a year, 7 days in a week. So 52 week. So if we're looking at 34 candles, I'm using CCI 34, which means I'm looking at the past 34 weeks in a stock, and I'm seeing what is the trend which is occurring in the stock in the medium term, which can probably give us a really good return. So I'm not looking at very short-term time frames. So I'm looking at probably 6 months, greater than 6 months view what the stock has done in the past, and I'm trying to take a long-term view as to how much the stock can head higher. Okay, so that's what I'm doing. So in this week's stock, again, there are some interesting stocks which have come. Siemens and ABB are pretty interesting stocks. The market cap is around 1 lakh crore and 54,000 crores. Now these two stocks also are looking very, very good. But I have some small cap options, because of which I'm moving to small caps, because large caps, they tend to do well, but they would not give you as much returns as sometimes they might give, but most of the times they might go into sideways consolidation and they might not give you that much returns, even though they might tend to move higher. For example, both ABB and Siemens have been consolidating very strongly for the last 3 quarters, 2 to 3 quarters, and whereas small cap stocks do correct a lot, so keep that in mind. Volatility is pretty high in small cap stocks. So in case you want to look at large caps, Siemens and ABB are pretty good stocks to look at this week. Also, Abbott is another good stock to look at. So apart from that, even Biocorp is a very good stock to look at. Okay, but this week I have 2 stocks. The first stock that we're going to look at today is Craftsman. Now, Craftsman is a mid-cap company from the auto ancillary space or from the automobile space. Now that's the first stock I'm going to look at. It has a market cap of 5,000 crores, so that's why it's a mid-cap company. Anything greater than 5,000 crores, we tend to classify it as mid-cap companies, and that's the first stock I'm going to look at. Now, as always, what I'm going to do is take a look at first the fundamentals and look at what the company is doing. So I have my screener.in here, which I always look at. So Craftsman Automation, 5,000 crore market cap. It is trading at a PE of 32.3, ROC of 18, which means it is making money. It's a profitable company, right? The PE is around 32, and promoters hold a good 60% stake, and sales growth has been 42% sales growth. Now that's what attracts me to these kind of companies. Now when you combine technicals and fundamentals and companies which are breaking out from long-term bases, and if the sales growth is so strong, there's a very high probability that this company can do well in the coming days or coming weeks. Okay, as I said, this company is in the automobile space, so they are making it's in fact a Tamil Nadu company. I come from Chennai, in case you don't know, but yes, it does make automobile components for the automotive, industrial, engineering segments. It's headquartered in Coimbatore, close to my place, and also it has a 53% market share in the automotive powertrain space and 21% or a 35% market share, 21% market share in the automotive aluminum space. Now that's why overall, around 70% of the share of revenues is coming from the automotive space. That's why it's an auto ancillary company, right? Just looking at the PE ratio as always do. It has been posting a good, since 2021. We don't have much data here because it was recently listed, but the EPS has been good. But let's take a look at the quarterly results, right? Now that's what is interesting me. So in the quarterly results, if you see here, this company has grown from 334 crores sales to almost 650 crore sales. Right now, remember the automobile space itself has not been doing well in the recent quarters or in the recent couple of years, and this company has managed to grow its sales by 100%. So March 2022 to March 2020, it has managed to grow sales almost 100%, right? While the margins have been pretty stable, right, around 24, 27, 28% mark. At least in the last few quarters, it has been on 25% mark. So overall, the margins have been pretty good. And the PAT has, we're looking at all-time high PAT, 51 crores in PAT. Now, the interest that they're paying for the debt is almost stable around 20-30 crore mark. In fact, it has reduced of late. It has gone down from 35 crores to 18 crores, and the PAT or the profit after tax is around 51 crores. So overall, these are excellent numbers for me, and a company like this, it's breaking out. I'm going to talk about technicals also, so that's why it looks really interesting for me. So again, look at the sales in the last 4 years or last 5 years. Again, it has managed to double its sales from 1,100 crores, to 2,200 crores. That's exactly 100% return, 100% jump in the overall revenue, right? The revenue has hit a top probably last year, 28% revenue margins, operating margins, and this year we had a 24%. No, that's a reduction in the overall margins. But again, as I said, the interest has come down, right? The interest that they're paying has come down, and that's probably adding to the bottom line. And if you see, we have the PAT here at 160 crores. So overall, for me, that revenue and that PAT growth has been phenomenal, and that's why today we're discussing this company. Look at the PAT growth. It has grown at a 19% CAGR in the last 3 years and 15% CAGR in the last 5 years. The reserves have been very good overall, and also debt has come down from 1,000 crores to 800 crores. Now, if I see the debt numbers rising in the next couple of quarters, then that will definitely be a concern for me. I do not want to be invested in companies where the debt is pretty high. But overall, for me, yeah, right now it's not concerning because the company has managed to bring its debt down in the last couple of years, right? So overall, for me, that's totally fine. And just looking at the shareholding pattern here, they have promoters hold a significant 60% share. FIs have managed to increase a stake to 3.9% from 3.83 in the last 1 year. And DIs have also increased the stake. DIs have increased the stake from 12.5% to almost 15.5% now. Now, that's some big money coming into this company. Now, remember, always DIs and FIs investing in company means the number of shares that they have overall in the market is being pulled or is being absorbed, which means there's not much money left or much shares left for people like us to buy, which means the quantity of shares left or to trade is getting lesser and lesser, and that's why it causes this liquidity, not much enough shares to trade, so the stock price tends to head higher. When there's a lot of positive news coming in, it just keeps heading higher. Okay, so that's overall the fundamental analysis of Craftsman automation. I know a lot of people have been tracking this on Twitter, on social media. They've been talking about this for the last couple of quarters, but the stock has not done well. So using technical analysis, we're going to look at now how we can time stocks and how we can buy a company like Craftsman Automation. So switching to trading view, and I'm going to show you, the technicals of Craftsman Automation. So let's take a look at Craftsman Automation. Now, in case you do not know how to use TradingView, I have a video on how to do trading, how to use TradingView. It's a very good tool. If you can afford some money, then definitely the premium version is something. Pro version is something that you can go for too. But I use the Pro version because I use it a lot. So in case you want to use the free version, there's also a free version. It just has some ads. So sometimes it's a little bit irritating, but for me, Pro is definitely a go if you want to use TradingView. It's an excellent tool. There is a video right on the top. I've explained how to use TradingView in case you haven't used it yet. So let's take a look at Craftsman. It was listed back in 2021 along with all the IPOs which came in last year. It was listed back in 2021 and we had a strong breakout right after listing, right? So we had this breakout here, kind of a cup and handle pattern here, and then we kind of headed higher and higher and higher. This was a crazy move that happened just post the IPO. And then there was a swing low here, which it never broke the swing low, right? So for me, that swing low, if you're investing, for me, that swing low would be a very major supply point, which means if the stock goes below the levels of 1900 levels or 1830 levels, the low here is 1830, 1840 levels. If it goes below this, then we might see a strong downtrend in the stock. But for now, this has not broken and it has managed to keep that uptrend intact. But for me today, what's really interesting in the stock is this inverted head and shoulders that I'm going to show you, right? So if you look at this pattern here, we have this beautiful resistance which is building up in the stock. And for me, if this stock is able to take out this resistance, or if it's able to cross this level, which is here, which I'm marking here, then definitely that's a very positive sign for me in the stock. So this is also inverted head and shoulders pattern, so which also signifies, that the stock is not in a mood to go down. Okay, so it is. So this is the left shoulder that we have. Then we have the right shoulder, and then we have a very complicated, right shoulder as well. So the stock right now has, kind of managed to, this week it has managed to kind of go to that level. Now the only concern for me is from a very very short term perspective, that this stock has moved very significantly, right? It's gone up from 2,100 levels to almost 2,500 levels, right? So that's almost 20% move already. So it might consolidate for some time around the zone. It's already formed some selling pressure there, but for me this is the right time to enter this stock. Okay, now I'm going to talk about two perspectives here. One is the long-term perspective and a short-term perspective. So let's discuss the long-term perspective first. From a long-term perspective, this stock has definitely made a strong bottom here, right? 18,000 30 to 40 levels is, I see that as a major support zone. So if you're investing from a long-term perspective, keep 1840 or 1830 as a stop loss, and you can buy the stock at current market price or on every dip towards 18,000, 19,000, sorry, 1800 levels or 1900 levels. Okay, so if it goes to 18,800 or 1,900, that's definitely a buy with a stop at 1830. Okay, so that's from a long-term perspective. How much do you allocate? You allocate not more than 5%. You can begin with 2.5%, and if you see any dips, you can buy it. But that's how I would look at from a long-term perspective or investment perspective, right? Considering that this company is going to do well going forward. Now, if you want to look from a very short-term perspective, if you're looking for momentum trading, now that's a different way how you want to trade it, right? So if you're looking for momentum trading, then I would probably, take a very very small position right now, just as a stock, buy probably a 1% position or 2% position in the stock, and then if it breaks out above the levels of 2575, which is the high of this day, then I would probably go even with a much bigger position. I trade depending on stop loss. I trade even 20 to 25% position. I go sometimes even 40%, 50%, depending on how strong the market is or how strong that particular stock is, right? So buy above 2575, and you can keep a stop loss of today's low or this week's this candle's low, which is around 2400, right? So that's around 175% stop, 175%, probably around 5% stop. That's so keep a stop at 2,400, buy about 2575, and then you ride the trend as much as possible. And that's how I would do a very short term trading this stock, right? So reason why I'm keeping this low here is because we had a strong gap up, and I don't expect that gap up to be filled very soon, because there is already a major support zone over here, and probably we should take support zone around this levels of 2,430 or 2,500. So that's why we should take support and then probably head higher. So that's the first stock, Craftsman Automation. So I know I've spoken a lot about fundamentals and technicals. In case you did like this video, or if you like my analysis, do like the video. And now we'll take a look at the second stock, which is MPS Limited. Okay, MPS Limited is from the content solution space, and they provide contents for online platforms, education platforms, and and the company also has been growing pretty good. And remember, I found it from the same scanner here. If you go down, you will see MPS Limited here, right? So that's a small cap company, 1285 crores in market cap. Now remember, it's a very risky take, but I saw PC Jeweler as well. But fundamentally, it's a very bad company. But technically, that stock also looks good. So if you want to buy PC Jewelers, you can go ahead and buy at 31 rupees also, and keep a stop with the hourly low. It's a purely technical bet. It might do well as well there. Okay. So MPS Limited. Let's take a look at the numbers and see how it has done. So 1280 crore market cap, ROC is very good, 28% ROC, and ROA is 20%. Now remember a tip, if the ROC is higher than the stock PE, there's a good chance, and if the stock is pretty good, and if it's setting up pretty technically well, there's a good chance that the stock might do well in the coming weeks. And that's also one of the reasons why I'm picking up the stock, because I see it's slightly undervalued compared to how the ROC is, and also the sales growth has been, not that great. It's been pretty flat, but overall the numbers are picking up in the last few quarters. That's what we're looking at today. So as I said, this company is involved in the business of content solutions, platform solutions, e-learning solutions, and they also have a few other things. But 54% of the revenues come from the content solutions side. Okay, then you have 33% coming from platform side and 13% coming from e-learning solutions. So the major bet is this and this, right? So remember, they are into platform solutions, so probably this and this might drive the revenue for this company, considering that we are in a digital age where everything is moving to digital, right? So looking at the EPS, now look at the EPS, right? So we've hit a high of 37 0.8 or around 39 we've hit around 2016, and since then it has been stagnant. And again we've seen an uptick this quarter, and this quarter we have gone above 41. The EPS has hit an all-time high for the first time, and that's why this stock makes it interesting for me. And if you look at the quarterly sales, the last 1 year has been phenomenal. In fact, the last 2 years have been very good for this company. It has moved away from it was doing a 40 crore, 50 crore sales, and now it is doing almost a 70 to 80 crore sales, right? The margins have been very good. In fact, the margins have improved an all-time high of 40%. Now that should, really, really bring in some curiosity to you, because if a company has been able to increase its margins, which means the company is definitely doing something right. Either demand is very high, or they managed to optimize their costs, because of which the company is able to post very good margins. As a result, overall, the PAT has also gone up to 19 crores, right? Now, looking at the yearly trend, as I said, the last 2 years have been phenomenal. You can see that comparison compared to how it was doing, in 2016. 2016, it did a high of 224 crores, and today it's doing a 280 crores, right? So it has been stagnant for the last 4-5 years, but last 2 years have been very good, and they have been able to, manage to make higher revenue as well. The profit margin has been down a bit, so it did hit a 40% high, but then it started going down to 32%. But again, I feel that operating margin, probably has bottomed out at 32 levels, and we might see a trend of increase going forward from here. As I said, the PAT has been very good, and overall their reserves also are pretty good at 300 crores. They don't have much debt, so borrowings are nil, almost, or 11 crores borrowings. And the promoter holds a significant 68%. Promoters have increased the stake. FIs have been almost flat, kind of reduced the stake, and again the increase in stake of late. And FIs don't have much stake. Most of the stake is held by public. So that's a short fundamental take on MPS Limited. I'm sure this is, many of you would have held this company in the previous bull run. We'll take a look at the charts shortly. But if you've been holding this for quite some time, probably bought it in the last bull run, probably bought it somewhere around here, and finally it's coming back to your cost, right? Now that's probably, don't sell it off right away. If you've been holding the stock since 2016, if you bought at the top here, it's probably a time not to sell, but probably time to add more. Let's look at why that is, and that's the technical analysis I'm going to look at today. So here we've had this massive breakout, in 2009, 2010, from where the stock kind of headed from 70 levels to 700 levels. That all was almost to 1000 levels almost. There was more than a 15x returns that we had, around this breakout here. Now remember, I did do a video on horizontal breakout strategy, which is an amazing strategy, and one of the most reliable strategies if you want to look at technical analysis. All you have to do is look at where the price has been, hovering around, and then you buy that breakout there, and you try to hold it for long periods, and you might tend to make really, really good returns, especially from an investor perspective, right? Even a short-term momentum burst, you can also play that if you can follow the strategy. The video link should be in the top right or left corner. Do check it out. It's a good strategy, especially for beginners. Now, what the stock has been doing is it has gone up crazy, and then it did a complete correction, and this correction was almost 50% of the entire move here. And again, if you know Fibonacci ratios and all that, 50% correction to the 50% level is a pretty good correction. And then we've had this massive move from the lows of around 150 to the highs of around 800, and then we had a short correction. Now again we are heading higher. Now remember, we already had a downtrend breakout, here we had downtrend breakout, plus we had kind of I don't say inverted head and shoulders, but kind of inverted head and shoulders with a very short right shoulder, and we kind of had a breakout here, and we retested that low there. So if you go to the weekly charts here, you will see that we kind of, I'll just remove this just to show you. We took support around that weekly support zone there, right? So that weekly low held there, we had a move up, kind of retested, and now we are again heading higher. Now from a very short term perspective, I'm just switching to the daily charts. If you see here, we've had this crazy move up from here, we had a dip, and now again it's heading higher. So for me, we've had a very short term, very good breakout here. You could call it even a medium term breakout, because it's been quite some months. And that resistance over there, if you see there's a resistance over there, we had a resistance over here, it kind of dipped again. Now again we had resistance over here, which means the price rejected, again it fell down, and again it fell down. And finally last week on the 6th of July is when we managed to break out and close over that level. And the last 2 days we've been going sideways. Now that's a very, very good breakout over there, and I see that this stock might do well going forward. From a long-term perspective, if you want to hold the stock, here the stop loss is pretty less. From a long-term perspective, 650 could be a stop. and you can probably look for much higher targets from here, and the stock might do well going forward. So 650 stop loss from long term target, and from a short term, if you want to trade from very short term perspective, momentum burst, then keep your stop loss even around levels of 700 levels from a short term swing trade perspective. So both are actually not much difference. So it's probably 7 to 8% difference in both. So long term, keep a stop loss of 650. Short term, keep a stop loss of 700 and buy at current market price, and you might tend to see good returns going forward. So for me, targets is first all-time high. Target is 800 all-time high. So if you are buying right now, selling at 800 doesn't make sense. But if you look at the all-time high targets, I'm expecting target of around 1095 levels. So if you're short-term momentum trader, so probably around 1100 is what you want to look at as to book profits. But if you are a long-term investor, then you're going to probably look at even double this price of what we have right now. 750 is right now what's trading at. So we look at even 1500 levels in the next 2-3 years. So usually long-term breakouts, I tend to look for at least 100% targets and just ride the trend if possible as much as possible. Right, so these are two stocks I wanted to cover. Now, in case you don't know how to identify targets, I'll do make a separate video. But first target should always be the previous all-time high if the stock is not very deep, right? So because here I don't see any major weekly swing lows around this point. For me, the major weekly swing high, the major weekly swing high is recent all-time high. That's why my target is recent all-time high. So yeah, I'll leave you here. I will have a lot of videos coming in. I have a new setup now, so I am excited to make a lot of different videos, and I have kind of a permanent setup, so it's easy to set up and make videos. So if you do like my setup, do comment in the videos. Otherwise, stay safe, trade safe, and take care. I'll see you in another video. Until then, bye-bye.